final investment pitch for the morning session will be from Tom Revy. Tom is Managing Director of the Evion Group, and he's going to talk to you about the Maneri Graphite project in Madagascar. Please make him welcome. Thanks, Tom.
Good afternoon, ladies and gentlemen. This story is all about Evion and graphite specifically. I think what I'm going to do is basically break this story up into two lots. The first lot will be a little bit about graphite, because I think from a macro view, I think if you're ignoring graphite as investors, you're missing an enormous opportunity. And I'll explain why shortly. And then I'll move on to the projects that we have as such. We listed the company back in 2018 as Black Earth and changed our name to Evion late last year. The company at that stage when we floated had simple early stage exploration projects focused on graphite. But our vision at that stage was very clear, and that was to become a material player in the global graphite supply chain. And not just to be a miner, but to be more than that and go downstream. In a very short space of time, we've managed to really position ourselves and continue that vision. Today we have the Maneri Graphite project located in Madagascar, the southern part of Madagascar. It's got an NPV of about $200 million US post-tax. That's about 300 million Oz. And I say that because our market capitalisation is about 12 million Australian dollars. That project is pre-construction. The studies have been done, and I'll touch on what still needs to be done, but effectively we're now working with the government in terms of final permits and licensing. And that's our primary asset. Our expandable graphite project over here is currently being built in India. Okay, it's not a dream or anything. We've got steel going in, concrete being poured, etc. And we'll be the first ASX listed company to actually produce expandable graphite, and I'll touch on the reasons, the uses of expandable graphite, etc. later on. That alone, it's only a small project, but our share of NPV, because it's a 50-50 joint venture, our share is 38 million or about 50 million Oz. Again, our market cap is only $12 million. And finally, we have a project in pre-feasibility study. We're working collaboratively with a company called Urbix out of the US, who are providing the coating, spheronizing, purifying graphite technology. Now that's a mouthful, I appreciate that. But it is effectively the intermediate product between the graphite concentrate produced at a mine and an anode. Okay, it's that intermediate product that currently 100% is made in China. So there's a geopolitical risk there that most people recognise, and that's why we're going down these two downstream routes. Just a quick one on the graphite market. This graph is done simply for one reason. It identifies the wealthiest and thus the most influential countries in the world, and their intention to build more or new gigafactories in their own backyard. They understand that we've made this step change, which would irreversible step change into energy production and management. And graphite is a key commodity as part of that. I'm not just talking lithium-ion batteries. It's a critical part of also the nuclear industry, which we've heard about today, and also in terms of vanadium flow cell batteries, as well as hydrogen fuel cell batteries. This just shows China's dominance on graphite specifically, and we all understand that there's certainly growing geopolitical tensions between China and the other members of the G10. China currently produces in the order of about 70% of the world's natural graphite from mines. They also produce, as I said, 100% of their intermediate product. So if anyone has a lithium-ion battery, and let's face it, that's everybody, that piece of graphite has gone through China at one stage. And of course, they dominate the anode side and the battery side. And this really brought it home for me. Basically, what we're looking at is when major supply deficits occur. This yellow line basically shows when natural graphite moves into significant deficit. That's ahead of synthetic graphite and certainly lithium. So while the world's getting excited about lithium, pointless making lots of lithium for lithium-ion batteries when more than half of it is requiring graphite. So that's why right now, from an investment point of view, that's what gets me out of bed and excited, and it should be a huge alert to anyone considering investing in the resource sector. This just summarises what I've basically said, but if you've got the most powerful people in the world defining it as critical and it's coming to a crunch time in terms of supply, it's a great time to be investing in natural graphite. So on to the Maneri project. It's located, as I said, in southern Madagascar. We have another project, another graphite project to our north, owned by NextSource Materials, a Canadian listed company. That company has a market cap in excess of $200 million and is currently producing as of 2 months ago. That alone shows that you can build and develop projects in Madagascar. It's treating the same geology, mineralogy, it uses the same metallurgy as us, it's using the same logistics as us, and it deals with the same local stakeholders. So that project completely validates what we're doing there. Again, they're 200 million plus market cap, we're 12 million, and we're pre-construction. And then we have Rio Tinto down here in the south with their $1 billion mineral sands operation. We have access to the 2 ports, Toliara and down near Fort Dauphin. The benefits of Madagascar, I'm not going to go through all of them, and if you do want more detail, and there'll be a lot of detail up here, come and see us at the booth. But primarily, Madagascar's been producing natural graphite for over 100 years and is regarded as some of the best graphite in the world. I talk to off-takers, I say, we're planning to produce from Madagascar, and they don't question it anymore. There's no free carried interest here. So when I'm talking MPVs, that MPV is 100% attributable to shareholders, not 84% or some other sort of magic number. And so we're really excited, and the fiscal terms of operating in Madagascar are very attractive. The highlights of the project, I won't go through them all, but suffice to say we have 18 years of reserve life. That's about 5 times longer than our payback period. So that gives not only investors, but banks, importantly, a lot of comfort in terms of the payback period and how quickly it can arrive. In terms of where we operate, we sit in a graphite domain, which I'll show you later on. It's got an exploration target of 260 to 380 million tonnes. We're starting off with a 500,000 tonne plant, and we're expanding it to 1 million tonnes. So it gives you an order of magnitude how big this thing could really be. And even as 500,000 tonne throughput producing 40,000 tonne per annum of product, will be a material producer in the world. We've approached this largely because of my background in a very systematic quality way. We've engaged top internationally recognised consultants to work with us deliberately, and it's been done in an auditable fashion throughout the process, from when we started exploration to where we are today, pre-construction. We also validated our process design by actually exporting out of Madagascar 70 tonnes of ore and processing it continuously through a pilot plant. And we got live data for our design purposes. So that's what gives us a high degree of confidence. The path forward, as I said, what we're doing now is we're working with the government in terms of approval for our environmental social impact assessment. We're working on the resettlement action plan and a number of areas, but they're the 2 key ones before we get into construction. The upside is huge. That red area denotes the exploration target, and those 2 white ovals are where we will be mining from. We've only explored really 10 to 15% of this tenement, so there's massive upside. And what we give shareholders is that value add by going downstream, which I'll touch upon shortly. We also have another project to the north. It's an exploration project, sensational grades, and it's located only about 8 kilometres from that company I mentioned, NextSource Materials. And all these tenements up here are granted mining leases already. And this is our Maneri project, some 60 kilometres to the south. India, we're building this expandable graphite project at the moment. We're working in joint venture 50-50 with a company with over 20 years experience in producing expandable graphite. It's located in Pune, which is inland from Mumbai, and the access to infrastructure and personnel is absolutely fantastic. That's just a quick shot of the land that we purchased earlier on in the year in an industrial site in Kurkum. That's a picture of the site a couple of months ago with the steelwork going up, and once complete, it'll look like that. So we expect it to look like that around about November, and then we'll have a number of weeks of commissioning. It's not a complex process, but it's important to have the operating know-how, which our joint venture partner brings. These are the highlights. Again, only a 1.2 year payback. It's a very quick payback. It's low capex. We've got the ability to generate capital, get in the graphite game, and have the opportunity to expand it because it's a product in high demand. I'm not going to go through all this, but suffice to say that we have supply secured. So before Madagascar feeds our expandable plant, we've got supply coming from a large German trader. Finance was secured and announced some time ago, so it's not a cash draw from our side. We're now using debt to finish the plant, and offtake is secured 100% at our election to an Austrian company called Graphit Bergbau. And these are the sorts of applications we're talking about as far as expandable graphite, but it's largely for the fire retardant industry, and it gives you, very simply, an enormous uplift in terms of revenue. Quickly, the battery anode material. We've done a lot of work on this. We've done about 2 years' work on battery suitability using tier 1 end users and also Dorfner Anzaplan as an independent laboratory. And it's proven to be top quality graphite for the purposes of building or use in lithium-ion batteries. These were the highlights of when we did a scoping study at the beginning of the year. Again, very attractive project, post-tax NPV $260 million. And again, our market cap is $12 million. That's the corporate overview. As of the middle of the year, 4.3 million in cash, which is plenty because we're not burning cash on India. We're not burning cash on the PFS, which is being funded by our collaborative partner. And we're not burning a lot of cash in respect to the project in Madagascar at the moment. And certainly a very, very experienced team in place. We're not only ESG accredited by Digby's out of the UK, but we follow the United Nations 17 Sustainable Development Goals as well. And finally, from a compelling opportunity point of view, as I said, great MPVs. We have 100% of the Maneri MPV for our shareholders. We have the benefits of downstream opportunities for our shareholders to elevate that revenue. There's the diversity of product mix coming out of our project versus our peers provides some sort of decrease in risk exposure by putting product into different markets. There's enormous opportunity to increase output, etc. 18 years of reserve life, and our materials product has been tested ad nauseum, to be honest, in terms of proof that it has a high demand in the marketplace. So thanks very much for listening.
Questions for Tom? Conscious that the pastries are probably running out, but I did have one very quick question, Tom. Everyone talks about the demand for EV batteries in terms of graphite. Very little is known or discussed, at least, about other markets for competing supply. Can you give us a bit of insight around that?
Yeah, sure. Good question, actually, because right now, well, historically the biggest user has been the refractory industry, which means crucibles, furnace linings. It's used in the smelting industry in general. And on that basis, with global GDP down, people talking recessions, cost of living, etc., that quantum that traditionally went into that market is being absorbed by the lithium-ion battery market, which just can't get enough material. When we start to see an improvement in global economics, that market, that refractory market, is going to start pulling back material out of the lithium market. And that's going to be a major driver. And I don't think people quite understand the significance of that yet, and I don't think it's been picked up by the market, so that's why it's a good question. And I think that's the sort of thing that's going to give the graphite price a real hit. And the beauty with graphite is graphite price can increase 60%, and it only increases the price of a lithium-ion battery by 2%. So there's enormous upside in terms of investors in graphite on that alone.
Thanks, Tom. Cheers.
Thanks very much.